Hello, everyone. We are close to the end of today's sessions in terms of venture capital investing in Peru and more broadly in Latin America. Throughout the day, we've seen different stories and experiences about development VC investments. We've heard different approaches and investors. Just before this session, we had a very interesting panel discussion with some of the development finance institutions operating in the region. And now we're going to have a fire chat conversation with Marie from the Dutch Good Growth Fund, which is an Dutch investor that has a strategy to invest in venture capital in Latin America, and we'll hear more about it. So welcome to this session, Marie. And thank you very much for being part of the Venture Capital Conference, the Peru Venture Capital Conference 2021. Marie, it's a pleasure to have you join here today. And I'm going to very briefly introduce myself, and then please, I'll leave the floor also for you to introduce yourself. So my name is Santiago Alvarez. I'm a co-founder and managing partner of Ally Ventures. Ally Ventures is an impact investment fund dedicated to invest in the high impact but also high growth potential companies with a particular focus in Peru and Colombia. We invest in companies that they have scalable business models and intentional positive social impact in the region, specifically in the sectors of education technology, agribusiness, and access to energy. And I'm very happy and proud to say that Marie is actually our anchor investor and in our fund. So we've been working already for about 4 years, and very glad to have you, Marie, here with us. And please, I'll let you to introduce yourself.
Thank you very much, Santiago, and thanks for inviting me to this conference. As Santiago already introduced, I'm a senior investment associate in the fund investing team of a company called Triple Jump. It's a private asset manager based in the Netherlands, and we are dedicated to investing in emerging markets. In emerging markets, we have operations worldwide, invest into different asset classes, and we also have 5 offices, including 1 office in Peru. Since 2014, Triple Jump has been managing the Dutch Good Growth Fund. This is a fund-of-fund initiative which was set up by the Dutch government with the goal to invest into missing middle SMEs in frontier markets, with the underlying idea that especially this sector is very underserved and public funding could be used to catalyze more financing into the sector. The Dutch Good Growth Fund has 2 parts. On the one hand, the team I'm working with is a $350 million fund of funds, US dollar fund of funds. And then we also have a different part, $40 million seed capital and business development pocket. And I'll say probably a little bit more about those 2 different pockets a bit later. Now I'm working in the fund investing team, and to date, we have been investing into 31 funds and financial institutions, and we add around 3 to 5 investments each year.
Thank you, Marie. That's very interesting. Please tell us a little bit more. I mean, you said you have kind of 2 pockets. One to invest in fund managers, but then you also do direct investments. Could you please give us a little bit of color in terms of these 2 different strategies?
Yes, of course. So indeed, as in the Dutch Good Growth Fund, we primarily invest via financial institutions or investment funds. And the idea is that I'm based in the Netherlands, and I don't have the knowledge and expertise to invest into SMEs locally, but therefore we invest through intermediaries. And in financial institutions, we invest directly. In funds, we also, in a way, there we really invest indirectly. It's always an indirect investing strategy towards SMEs. Now, our seed capital and development pocket, they also invest directly, but then also into financial intermediaries. So, for example, into fintech companies. But no, as DGGF, we don't have a co-investment strategy. We don't have exposure directly to companies. This is something other DFIs do. We don't do, and it's not part of our mandate.
Mm-hmm. Interesting, Marie. And so let us go a little bit deeper into your fund strategy, because I understand that as part of that fund strategy, you've been investing in local fund managers. So you're investing in emerging markets, like Asia, Africa, more recently Latin America. And part of what you're trying to do is to foster sort of the venture capital ecosystem and to support sort of the growth of local fund managers that in return will invest in startups and early stage companies in the region. Tell us a little bit more about sort of the work that you're doing in that respect.
And your question specifically with the work with first-time managers?
Yes, like in terms of like how do you see the fostering of first-time fund managers, of local VCs? I mean, understanding, and we've seen throughout these days in the Peruvian Venture Capital Conference, is that there is a nascent sort of venture capital ecosystem. So it's not as developed sort of in other regions, for example, in Latin America, but there is a sort of a starting group of actors that are growing the ecosystem. So interested sort of to hear your perspective in terms of how you see that ecosystem and how you see sort of your role in terms of supporting local fund managers.
Thanks for clarifying, Santiago. Indeed, it is at the heart of the Dutch Good Growth Fund to spur a development of the financial ecosystem. And this is really from incubators, accelerators, up to investments funds that really can carry and finance companies throughout their growth stage. So. And I think this is also learning that we've had from investing in 7 years, that there's not one missing middle, there are many missing middles. And even in maybe you would say more developed financial ecosystems like Latin America, if you compare it to other countries that we work in Africa, for example, you still see that there is a need for actors, for investment funds, in this ecosystem, especially where we see the biggest need, I think, is really, and if you know talk about venture capital and in Latin America as well, but also in other countries and other frontier markets that we work in, is that the biggest need is probably at the lower end of the market. So you have some Silicon Valley investors or some larger corporate investors, or even large regional investment funds that want to invest tickets from 15, but maybe sometimes even 50 million and more. But really for the starting phases of a company, from friends, family, and fools to those bigger investment funds, there's really a big gap. And this is something we as DGGF have made a mission to support, and therefore we also have a focus on supporting first-time managers that don't yet have an established track record, and thereby find it a little bit more difficult to raise funds from development financial institutions or from private capital investors, to really complete that, or at least catalyze more funding into the system.
Great, Marie. And we might have, either first-time fund managers or prospect fund managers in the audience. Please tell us a little bit about sort of what is your strategy. I mean, what are the things that you look for when you're doing due diligence or assessing sort of an investment opportunity in a venture capital fund manager? I mean, what are the considerations they should have, if they're thinking right now, well, this is great, I'm going to try to approach DGGF for potential funding down the road. What are your ticket size, geographies that you're interested or not? I think this context would really appreciate it.
Yes, thank you. And well, I haven't been a fund manager myself, but one learning that I have is that it's really, really hard work to set up a fund, and it costs lots of money. It's combined with a lot of risks that I think a lot of us wouldn't want to take. And people really, it's really amazing work that teams do to do this work and to set up their first funds. So first of all, endurance, patience, because it is very hard to raise capital, especially in these times. But then, of course, when you do have all that in place, then I think still for us, for example, somewhat of a track record is important, or at least that you show that you have experience with investing into SMEs, or as a team that says, and I think really having shown that you can work together. For us, investing into a fund is something like fund managers investing to startup. Often the team that hasn't worked together before, they have a strategy, but they don't know if it works, and it's all very innovative. And really, we base all our assessment in the end on the teams and the people that we work with. So sometimes it's a bit difficult. It's very soft as well. It's not black and white, and it's not numbers based, but it's a very qualitative assessment. For talking about ourselves and what we can offer, as I said, as the Dutch Good Growth Fund, we have various tools to support managers. So on the one hand, for the team I'm working with, we invest into funds of a minimum size, a fund size of around 20 million. That really depends on the circumstances, on the strategy, but it is important for us that a fund size is sustainable and that there is sufficient budget also to carry the team through and operations through this period that we are investing. We have been investing only into fixed term funds, mostly 10-year, 10 plus 2-year funds. Also now there's more talk about permanent capital structures. Ourselves, we have less experience with that. We've some experience, but less. We invest into 70 countries. Our main focus is in Africa, but in Latin America we also have a focus. And we invest into Peru, Colombia, Bolivia, Guatemala, Nicaragua, Haiti, and Suriname. And our investment tickets are anything between 1 million and 15 million. I think it also again really depends on the circumstances. And last but not least, we have been receiving a lot more VC proposals recently, and this I think a trend that we see. It's very logical. A trend that we see in the whole world. Our world is changing very much to technology being part of our everyday lives, and this trend will continue and is probably accelerated through COVID. So it's, I think, very normal that we get more VC proposals. We are a bit picky when it comes to venture capital, in that we really want to see that the strategy is creating a positive impact, and that it's not only managing ESG risks, so to say, or environmental, social, and governance risks, but we really expect our managers to go the extra step to create positive impact for the societies they work in. And as DGGF, we have a particular focus on access to finance for female entrepreneurs, access to finance for young entrepreneurs, and employment creation for also both of those target groups.
Excellent, so, Maria. I can relate very well to your point about sort of endurance and patience, because in our case, it took us over 2 years sort of to get to raise an initial fund, which is a long time negotiating and getting partners on board. But I can also say that the DGGF has been a fantastic partner to us. You just touch upon a very interesting point, Marie, which is ESG and impact. I mean, for the audience, ESG is sort of the considerations about thinking about environmental, social, and governance practices around sort of investments and when you're making investment decisions. And then there is, I think, this extra layer that you're also pointing out, which is impact. For ourselves in Alive, this has been sort of front and center and core in our strategy. But it will be fantastic, Marie, sort of to hear from you. What is your perspective, I think, on both components, ESG and impact? Because I think, you know, in the context of you being part of a DFI, these are sort of the organizations that are probably driving forward some of these trends, and would be very, very interesting to hear your perspective.
Thank you. Yeah, ESG is super important. We find that absolutely, crucial to when we invest, that our managers have policies in place and also know how to implement policies relating to ESG. Especially in the venture space, it's an interesting development that we have. I think also with a lot of business models being based on algorithms. There are specific, again, very specific ESG risks to venture capital investing. For example, because those algorithms could be very prone to discrimination, because past sort of biases also are reflected in these algorithms. And we as DDGF, we have a separate team and a really dedicated team responsible for ESG due diligence and monitoring of managers. And they can also provide technical assistance support to managers, especially to first-time managers who don't have the knowledge and don't have the capacity to get their standards aligned. And I have to, I think I can say that all our managers, because they work in the impact investing space, they are very aware, and absolutely we get all their buy-in from for ESG practices. It's never a difficult conversation. Everybody understands that it's absolutely necessary to respect the boundaries, and that we need to act in line with international standards. There is, I think as I said before, we expect our managers to do a little bit more for impact. So not only managing risks and not just looking at do no harm and exclusion criteria, but really look for ways how technology can be used to have a positive impact on societies. And I think you're a very good example of a manager that is doing that really well.
Thank you, Marie. And
I can add maybe one thing, because this is a bit of we have also recently had a bit of a strategy and evaluation on our end, and we are now also looking more and more, also especially in the VC space, which is very broad, for investments that can spur inclusive growth. It's a wide term, but we really also look for managers that invest into companies that are operating in rural areas, companies that are employing a substantial part of low-skilled workers, or female or youth, for example, and also companies that offer products and services, especially benefiting low-income or BOP customers even.
That is interesting, Marie, and I know you have recently sort of also developed sort of a strategy in terms of being more gender inclusive, and this is, I think, is a trend that is just very, very much important, especially, for example, in the context of Latin America, that we have a very strong macho culture, to be honest. And so, could you elaborate a little bit in terms of what you're looking for and what is your gender strategy?
Yes, absolutely. Indeed. So our gender lens as DDGF is specifically looking at entrepreneurship. So this is, I think, in the core of our mandate is to increase access to finance to businesses that are led by women or that are also managed by women, so already owned or led by women, I have to say. But also so this is the core indicator we track, but also we're very supportive of any managers incorporating a gender lens in their investment activities to really also make use of or tap into a segment of companies that they don't usually see. So I think we have a strategy on the one hand to really select fund managers that are dedicated, that have dedicated gender-led investing strategies and only invest into female-led and owned businesses. At the same time, we see that there is a big knowledge gap also in the financial ecosystem, and there are many managers that we work with that are very keen to know more about gender-led investing, but they've never gotten acquainted with it. So there also we can offer technical assistance depending on the stage of the fund and the interest and the knowledge of the team that is working there, to really help them tap into this market. And this is not only, I have to really emphasize this, this is not only for our impact criteria and our impact goals, but we really believe that it makes complete business sense. And there are so many companies out there that are owned by women and maybe are less accessible to very male-dominated networks, that just need a different approach, sort of, to get to know these entrepreneurs and also work with them. And then on the other hand, now I lost my thought, actually. Sorry. Two-phase approach. Sorry, can you help me there? Where did I just leave it?
You were discussing how gender and diversity is really sort of, it makes business sense. That it's not really only kind of an impact.
Yeah, exactly. Yeah. Exactly. Yeah. Where should I start again? Because I think I left it in the middle of it.
I think probably starting from that idea is you said, like, I really want to emphasize that for us, gender diversity and impact. Probably that would be a good point to start again.
Okay, start again. So what I really want to emphasize is that, of course, we invest with a gender lens, and we want our managers to invest with a gender lens because it would help us to reach more women. And this is, of course, very important to us from an impact perspective. But we also think it makes complete business sense. And this is also, it's shown through various research and studies that increased diversity in decision making, in decision making and in leadership and management of companies is only good for returns as well.
I couldn't agree more with you, Marie. We definitely believe that impact, diversity, gender equity are variables that are it's not only that they're good, from a society perspective, but actually they also become competitive advantage for businesses, on the long run, and especially considering the conditions that we're living these days in, and I think particularly in the region, the case of Colombia, especially, and what we saw in the region sort of a couple of years back is, I think, is a good example. Marie, probably I know also some of the audience might be thinking, well, yes, you guys are talking about ESG, you're talking about gender, and this is all very interesting, but how I really sort of go about it, how I do implement sort of these topics. For many, that could be something still unknown. You mentioned you have technical assistance. I'm familiar that you have very good resources to help fund managers navigate these issues. Like kind of frameworks to think about these issues and understanding. Is there anything sort of that you can share or point out, existing fund managers or future fund managers in terms of where they can get some knowledge around these issues?
And specifically about their strategy to impact?
I think, impact and ESG. I'm thinking about, for example, your ESG toolkit. I don't know. I think probably that's open source, so a good way for managers to go about that issue. And about gender. And just to put a little bit of context as well is, you also mentioned technical assistance, which I think is another interesting topic sort of to hear your perspective, because, for example, in Alive Ventures, we developed alongside the main fund, a technical assistance fund, and this was also mainly funded by DDGF, and it's a fund that is dedicated to support three main activities. One is impact measurement. The second one is increasing and supporting sort of like the gender lens perspective at the fund manager and the portfolio companies. And the third one is more a business sort of technical assistance dimension. But this, for us, has been crucial, and I think, you know, of significant value add to have these resources to support our companies, and even sort of to support ourselves, you know, as fund managers, and as we grow and consider these points. So if you can, you know, the specific question I think it would be is like, what is your perspective in technical assistance? And I think in these three components, in ESG, in impact, and business perspective, and how can DGGF, not a DFI, but kind of DFI, you know, support managers in these respects and companies.
Yeah, it's a very good point you raised, Santiago, because I think a lot of first-time managers, they struggle to get access to the right to sort of open source information, and we're trying to contribute to that through our knowledge team. So we publish articles, we make studies on our portfolio with learnings from our managers mostly. So that we create and we exchange knowledge with the sector, for example, on gender lens investing, which is it's not very new, but we're all just starting in this sector, and we want to know what works, how it works, and in which circumstances. And I think for this, the knowledge exchange is very important. On your question regarding TA, we also indeed we offer TA to our managers to once we decide that we invest, we offer TA to our managers to really get their ESG systems and processes up to standards, and then also on the other hand, our seed capital and business development team. What they can offer is three types of technical assistance. On the one hand, they offer pre-investment technical assistance to managers. Not in the case of you, but in the case of another fund manager with a gender lens investing strategy in Southern Africa. We really help them to develop their gender lens strategy, which also then help them to fundraise with other investors, just to make their strategy, all the good ideas that they had in their minds, and also experience that they had, to make it explicit and also palatable to investors. And then this is sort of a type of pre-investment TA that we can offer. Then also there is TA for portfolio of ours, so for existing managers, and this is something indeed we have partnered with you. And there, I think it is important to say that we also leave it to our fund managers, the ones that know best what is needed, what they need to be able to implement the strategy that they want to have, to then come with a proposal to us. So it's not a one-way street, and we really don't want to tell our managers how to do things. It's them who know best. We want to facilitate the conversation, and we want to obviously facilitate that also financially. And then last but not least, we have also support for managers that can be used for companies specifically. So let's say if a company needs a specific consultant or something else that would help the performance of the fund in the end, then we can also support that.
Excellent, thank you. So Marie, I mean, just looking forward a little bit, what are your thoughts in terms of how DFIs, I know you're not a DFI, but you behave like a DFI, or, you know, it's like governmental, you're representing a government sort of that is trying to achieve sort of a positive economic development impact in emerging markets. So, you know, like, and I think also I would add, you work along many DFIs. You collaborate with many DFIs globally, and I think, you know, specifically in the region, I mean, I've had the experience how you know work with the IDB, how you have worked with Bank Coldex, So
we all the same club, yeah.
Exactly, you have that perspective, and for us, we have you in the bucket of DFIs when when we're asked about sort of our type of investors. But looking forward, how do you see the role of institutions like yours and the other sort of similar bodies in terms of continue fostering the venture capital ecosystem? I think probably focusing on Latin America and Peru.
Thank you for that question. Yeah, there's if I have to pick one and one recommendation for all of us, or one observation for all of us, I think that can probably be confirmed by the audience, is that yeah, also the COVID crisis has made funding for underserved segments of the private sector and for a lot of startups that have great potential to have a positive impact on societies, has made that capital very, very scarce. So I think we are needed more than ever, and we also needed more than ever to work together to make funds happen. Because as you say, Santiago, we can never go alone. A fund always needs a certain amount of investors and a certain amount of capital. And I think it's very important that we find each other and that we support those initiatives that we can help us to get out of this crisis and help us also to build back economies, maybe hopefully in a more sustainable way than they were before. I think the ecosystem, the look on the ecosystem is also very important. So therefore, I very much welcome, for example, the introduction of COFIDE in the Peruvian ecosystem. Is that yeah, creating those hubs, creating those ecosystems locally, not only in Europe and in the US, but really in many parts of frontier markets, of emerging markets. Creating ecosystems where companies can thrive. And that means that we as investors, we should also take a bit more risk and that we don't only invest with the more established managers that have a good track record, but really that we also invest into new teams, into ambitious teams that can add to the ecosystem. And yeah, especially in the venture capital space, invest into also funds that not only enter at Series A or Series B, but really, are investing into also seed and yeah, maybe even pre-seed, seed, and pre-Series A stage, because there I think the capital need is the biggest. But it's absolutely crucial that companies can overcome this gap to really go and grow.
Excellent. Marie, and from your experience investing in fund managers in Latin America, that these fund managers are also investing in venture companies. Can you share some lessons or that potentially could be useful for managers or even for entrepreneurs that are on the audience? As we all think sort of how we can continue growing the ecosystem and continue developing like new companies, new fund managers, and also understanding sort of the challenging context in which we're living, which is a COVID world, hopefully a post-COVID world in some time now, but the regions is still far behind in terms of vaccination, so still time to go there. Yeah, I don't know, any lessons or thoughts that you could share could be interesting as well.
For companies, Santiago?
I think for the ecosystem as a whole, in terms of what has worked probably in the region to access capital, or what pitfalls sort of to avoid when raising in capital. And if you have the visibilities for the companies, great. Or understanding sort of that you're investor more at the fund manager level than probably at the manager level.
Yeah, indeed. I have to say here, and I think it's a good time to really say my appreciation for all those entrepreneurs and fund managers out there that face very challenging times every day and are confronted with different kinds of crises every day, and I have so much gratitude and also appreciation for them keeping on doing the work and creating great impact for their employees and others and other actors in the societies. This crisis, I think, has been overwhelming for all of us, for our managers. I think, I think it's great how managers like you have been supporting companies throughout these times, trying to manage the situation as good as is, keeping on, supporting companies, believing in their growth, and at the same time also, of course, thinking a bit further ahead, and how to adjust their strategies to the new circumstances. So I think for learning from our portfolio, when COVID hit, we have some fund managers that managed also together with their companies to make a change, adjust to the new reality, and also then adjust their investment strategies or even the company business models to more online services. And I think this agileness, this flexibility is super important if you want to survive in these times. And I don't know how hard it is, but I think these are really the entrepreneurs and the managers that excel.
Excellent, Marie. Well, thank you very much for your time. Thank you very much for sharing these insights. I know the work that you and DCF are doing in the region is extremely important and relevant, supporting sort of the local impact investing and VC ecosystem. Because as fund manager, I truly think we need more capital available. I mean, the entrepreneurs, they always said, that access to capital is the hardest thing. But even for fund managers, that's also probably one of the hardest jobs out there, which is raising capital to be able to invest in entrepreneurs. And so the work that organizations like yours are doing, I think, is crucial and catalytic also to incentivize other investors to enter the space and the ecosystem. So thank you very much, and have a good day.
Thank you very much, Santiago. Have a good end of the conference.